What's going on, everyone? Welcome to episode 2, guys. I'm so happy to come back to you again with episode 2. I had told myself that the moment I see episode 1 has hit 1,000 views, then I'll be able to do episode 2. All right. And I'm so grateful that when I woke up this morning, already episode 1, after like 2 weeks, had hit 1,000 views. So, guys, thank you so much for the love. Keep subscribing, keep watching, keep sharing. Turn on that notification bell so that you don't miss out our future videos, and we'll be so happy to come. So I'm coming back again to you, and I want to just show you how I'm just here to share with you my approach to the market, how I look at the market, how I do my analysis, what I'm always looking out for, and things like that, guys. So let's go into it. And remember, I've started a mentorship, sort of like an academy, whereby before I create a course, because I'm getting messages on people, how much is your course, when will your course be out, and stuff like that. So before we do that, because it's a work in progress, we have a mentorship program. And yeah, so you can join today. You can join. Let me show you the program. So yeah, so this is the mentorship program. So Forex mentorship program, a simple and unique approach to trading Forex. So our access fee is as $149.99. So the link is there also if you wanna talk more, find out maybe you cannot be able to afford the whole amount, you want to pay it in installment. There's always that. So you can always hit me up, on the comment section below, or the link is on the description. You can hit me on Instagram or on Telegram. Okay, so let's jump into the market. So, guys, for example, I'm starting with a GBP card. All right, this is the British pound, that is the Canadian dollar. So you can see that normally I start from the weekly time frame, daily, 4 hours, 1 hour, and then I take my entries either at the 1 hour time frame or at the 15 minutes time frame. So you can see that from the weekly time frame, you can see a long term that we had an impulse move correction, impulse move correction, impulse move correction, impulse move correction, and then we had this consolidation, an impulse move correction, then we moved to the upside, then we came down again. Now we are actually on a bigger correction. All right, perhaps this can continue going down either to this level over here, or I was actually anticipating to this level over here. But you can see that we are coming from an impulse move, and then there's a what? There's an impulse move, and then there's a very bigger consolidation to the side, of which can continue before we see a move to the downside. Okay, so now let's go to the daily time frame. Yeah, so this is how I normally analyze these markets. So so from the weekly time frame, maybe we can draw this. Sorry, let's just come here. Okay, so there is that. So you can see that that is what this market has given us. And then also some sort of like a contraction channel, sort of. Yeah, you can see that. And also there was this here that was being obeyed. Okay, so this is how I just look at it. And you see, all this thing is to be able to see the market structure, know what the market is giving to us, so that we can be able to trade well. Okay, so you can see that based on our 90% rule, I will anticipate, or I will actually target, if I was to trade this, I know that this market will definitely come all the way to this level over here, maybe before we begin to see the push to the upside. And that's because of the 90% rule. You see where the impulse move started from, which is this place over here. Then I expect this market to break and to come till to that level over there. So that's the first thing. So you can see that overall, from the weekly time frame, I'm actually looking for sell. Now this is quite interesting, because you can see there's a very strong rejection here on the weekly time frame. And maybe, for example, if you trade support and resistance, you put maybe your level over there, you'll be saying that a long term you're looking for what? you're looking for buys, all right? But I will not be interested in buys until I see this market has played all the way to this 90% down over here. So let me just delete this because I don't trade a support and resistance anymore. I used to trade that, but I stopped. So let me just reduce this here so that for pattern separation, I don't want to, have lines crisscrossing each other and a lot of things. I just want to reduce and make sure that your chart is as clean as possible. As you can see, there is no indicator. I don't trade indicators. I don't use any indicators. Well, if it works for you, well and good, but I trade pure price action, market structure, no indicator. Okay, so now let's go to the daily time frame and see how many opportunities we get. So you can see that here, you can see that on the daily time frame, as this market was approaching, let me take this back here, you can see that there was a strong impulse move. Then you see that here, this market gave us a what? As it was approaching this trend line over here, you see that it gave us a flag, and that's the reason why we see a strong push to the downside. Okay, so let's play this out. So definitely I'm looking for what? I'm interested in sales from this point over here. I'm interested in sales, and you can see that we're talking of roughly 689 pips. That's quite a number of pips. So if I play this one out, look at what happens. All right. So you can see that had an impulse move. Then we had this here. This another flag that formed over here. Okay. And this one formed over there. So definitely, if maybe even I take out this, of course, since when we started, remember, when we started, let's say we found this market over here, we cannot just enter blindly. So we want this market to give us, something, some sort of a flag confirmation so that we can be able to write this thing down. And that's why you can see that after there, you see that the market came all the way, then, it started giving us that structure over there. So if I go to the 4-hour time frame or even the 1-hour time frame, look at that. So from the 4 hours time frame, yeah, you can see that now it becomes a bit more clear like that. Okay, then you have this level over here. Okay, amazing. And then look at this, we had one touch here. Okay, and a touch over here. We had another touch over here, then we had another touch over here. So these are 3 touches. So definitely now I'm looking for this market to go down. So of course my first target is going to be maybe where the move started from, this level over here. That will be my first level. So you can actually enter here a risk entry up over there, or you can wait for a breakout before you enter. So now when you go to the 1-hour time frame, it becomes more clear because you see that. Let's reduce that over there. Then this is over there, and then just try to make sure that your charts are as neat and as clean as possible, so at least you don't get confused. All right. So you can see we are waiting for. Let's see if maybe you can get a breakout. Okay. What happened? All right. So here, of course, you can do this. See if this market will come and give you a double top before now you ride this move to the downside. So let's see. It might come all the way to the line, or it might actually not touch, because like we had a very powerful Euro JPY setup yesterday that I gave on my Telegram group. I tell you, people really, it moved 167 pips. Before now I started consolidating, and I can see right now it's moving the upside. So you can see we are looking at a what? At a possible first entry target of 13.58. All right, and how did this one play out? Let's see. All right, it never came all the way to, never triggered us. Maybe we could have entered here. Let's see on the 15 minutes time frame if there was something here. Of course, there was something. You can see you could have entered here, and this market was this here. I'm sure if you go to the 5 minutes time frame, let's look at that. Sometimes you can go further down, try and get a confirmation. All right, because of entries. If it's not clear on a particular time frame, then of course you can go further down. Then you can see here we had this. Okay, let me cut this out. Then I have this over there. So look at that, beautiful. So we had an impulse move, then the market started consolidating to the upside. Okay, let me even delete that. Okay, the market started consolidating to the upside, and of course, if I go to the higher time frame, you can see that we had what we had. Let me mark with this. We had our first touch over here, then we had our second touch over here. So of course, definitely on the third touch, that is when we'll be interested in what? In taking an entry. So we go down all the way to the 15 minutes time frame. Then you can see that if it's not very clear, you can go to the 5 minutes time frame. Then you can see that there was an amazing flag over there. And then you can see impulse move correction, impulse move correction, impulse move correction, impulse move. There's a very strong, there's a pin bar here, and there's a very strong rejection over here. So you can actually enter at the breakout. Okay, maybe put your stop loss somewhere around there. Talking about roughly how many pips are those? Maybe you're talking like maybe like 30 pips. Yeah, 30 pips thereabout. Then of course we are targeting, our first target is 4.85%. Okay, so let's go back to the 1 hour time frame so that at least it's clear. So you see that, let me expand this. So that's our first target. Our first target, we can target up to this trend line, and then of course you know that our overall target is down here. So we have this which is a 12.79%. Okay, let's go to the 15 minutes time frame. Yes, so you can see 12.79%. And then what happened? Let's play this out. You can see it chugs you in immediately, and then is going down. And then look at that, look at this, an amazing flag that has formed over here. So definitely can go to the 5 minutes time frame. And then what happened? The 5 minutes time frame, you can see that there was this flag. Remember, immediately after the breakout, we are looking for a flag. Okay, so look at this. So this is, we know that's at 12.74%. Then of course we are looking at our second entry at the breakout, stop loss somewhere around there, another 29 pips. All right, then what are we targeting? We are targeting this move all the way to the downside, and that's another 11%. Okay, let's go back to the 15 minutes time frame, okay, so that there are not so many candlesticks forming over there. And then look at that, what happened? Just consolidates, gives you another bigger flag. Okay, that was expected. And then what happened? Did it hit our stop loss? I think so. Let's see this one. Yeah, it hit our stop. So these things will happen. Remember, we are actually risking 1% of our account, so it's not a problem. At least this other one is still in profit. Okay, then remember, well, hardly do I trade the 5 minutes, but sometimes you can go to the 5 minutes to find confirmation if the flag is not clear. But normally I like the 1 hour, especially if I see a flag on the 1 hour time frame. I'm super much interested. Then maybe I get my confirmation on the 15 minutes time frame. But you can see that after this move to the downside, you can see that this was actually a a bigger flag. All right, this is actually a bigger flag that formed over here. All right, so this was actually a very big flag that was forming over here. And of course, you could have found entries here. You can see here there was this market consolidating to the upside. So and then look at that here. Okay, let's even take out this, and let's even say you are actually interested in this. So at the breakout here, maybe you could have entered again, depending with you. And then let's see how. So you can see that this one just came down, 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 down. And then what happened once it got to the trend line? Of course, 4% already hit here, somewhere around here. So then when it got to the trend line, then you see that it started consolidating back to the upside. Of course, you could have entered there, because you see that it's actually giving us a what? It's actually giving us a flag over here. Look at this. There's a beautiful, amazing flag that was forming over there, of which could have maximized and entered. Then what happened? Now, what happened? Let's play out. You see that immediately it just went down all the way. Let's see if it completed our setup. So if I play that, see that, yes, look at that, just completed our setup. So though we were taken out, maybe you could have been taken out on your second entry. Remember our first entry, let me take out this. Now this, our first entry was what was 12.74%. Yeah, so you can see that in this trade entered 2 trades. This one, all right, 12%. This one was, I don't know how many percentage you are taken out. So then at the end of the day you make 12.7. So it's like you have made 11%. And of course at the breakout here, I could have entered here, then I have maybe my 40 pip stop, then I'm riding this thing to the downside, and that's a beautiful 6.82. So plus the 11%, we're talking about what, 17%. So you can see 3 entries. All right, so we're talking about 3 entries. Okay, we're talking about 3 entries. All right, so the first entry is 12%. All right, so let me write it properly so that the mathematics is clear. Let's go to text. So we are talking about the first entry. We are looking at a 12%. Okay, then we are looking at our second entry, which didn't play out, which was 11% target. Okay, and then we have our third entry. Which is 6.8, let's say 7%. Okay, so look, so you let me press okay. So this is the math I'm doing. This is how I'm looking at this. Let me increase the size so at least it's a bit more clear. Let's make it even 28. Okay, yeah, so look at this. So we had our first entry over here, which played out 12%. We had our second entry, which didn't play out. So, but remember, we are risking 1%. 1%. You don't risk more than 1%. Don't risk more than 1%. Yeah, that's it. So risking 1% to make 12% played out. Second entry here would never played out. Risking 1% to make 11%. So this one never played out. So then we have our third entry, which is this, risking 1% to make 7%, which is actually played out. So if you deduct, so you see 3 entries on just one pair, okay, and then 2 gained and 1 lost. But look, at the end of the day, we made 12 plus 7, which is 19, minus 1, which is 18%, which is very good compared to over risking and maybe risking 10%, 20%. You lose, at the end of the day you actually end up blowing your account. That's what I'm saying, that risk management is key. You have to calculate that, because look, I will not be worried. I'm not worried that my setup didn't play out. Okay, at least I didn't lose my whole account. I only lost 1%, but I managed to recover it on the third entry, or actually the first entry, was able to cover me for that. And at the end of the day, I was supposed to make 12 plus 11, which is 23 plus 7, which is 30%. I end up making 18% because I didn't because I lost on the trade. But look, I only lost 1% of trade. So that is how to approach these things. And you have to approach this market professionally. If you just treat it casually, then and you don't treat it as a business and don't take it seriously, then you can never be able to make money in forex, and you can never be able to take this thing as a what? It's a business. All right. Now let's look at another pair, and maybe for this particular episode, I'd like to show you some of the trades that I took. All right. So maybe I'll show you some of the trades that I took and the reason why I took them. All right. And then you can see also even here, there's actually a flag here. You could have actually maximized. So this thing is super powerful. So long as you apply proper risk management, risk only 1% of your account. All right. So let me look at EJ. This is a trade that we took yesterday. I mean, this was just super amazing, and I gave this setup yesterday. So what happened? You can see that from the daily time frame, or maybe let me even start from the weekly time frame. From the weekly time frame, you can see that we are on a what? We are actually on some sort of like an upward trend. Okay, so we had a touch over here. Let me use this. We had a touch over here. Then we had another touch over here. Then of course, the moment we had our third touch, then I was looking for sales to the downside. Okay, so let's go to the daily time frame. So the daily time frame, you can see that this market was also giving us a structure over here, and then you can see that also inside this structure we had one touch. Then maybe let me change the color so it doesn't confuse you. Let's say white. At one touch, we had a second touch, then we had another touch, which you see that is the same as a previous touch. Yeah, so that's also another super powerful confirmation that look, this thing after 3 touches, we are looking for a move to the downside. And then you can see that even though we came very strong impulsively, then there was a correction, then another impulse, then another correction, then another impulse. Then of course I'm looking for sales. You can see that also this one, so means something like an M formation over there. All right, so when I go to the 4-hour time frame, on the 4-hour time frame, you can see that here, you can see that now I have this level over here and this level over here, and this market came all the way to this level over here, which is creating a what? Creating a double, actually a triple top. So that was very powerful, because that was a very good confirmation. Then also, not only that, look at this. After we had 1, 2, 3, after this, look at how the market was approaching the place. It was correctively, then it gave us this structure over here, which is a powerful sell structure. Okay, so I was definitely looking for sell. So actually I set my sell limits over there. Let me show you. So I've gone all the way down to the 1-hour time frame. You can see we had 1, 2, we had several touches. So then when the market got to this level over here, it started it started approaching this level here that we had put our line here. It started approaching it correctively like this. So I actually set my sell limits over here, and then I knew that it was going to go down. Okay, definitely maybe this could have been our first target. That could have been our first target, of which we're looking at possible maybe 79 pips, of which it was actually hit and passed. Okay, so let me go back to the 1 hour time frame. Then you can see how it just played out. You see that overall, I'm looking for to see if these cells can play here. I'm targeting a 9.2%. Then before now, the overall bigger move. And then you can see that definitely after it triggered us here, we had as 100. He actually moved 176 pips. Before now it's coming back. On of which I am thinking that perhaps to come back to this level over here, pass a little bit before definitely now we see a push to the downs, because you can see that this one also, it didn't complete this actually. Let me delete that. This one have this and this and this and this. That looks like an what? Like an M formation. And also you can see here, I'm looking at this as a sorry, I'm looking at this. This is like a left shoulder, then you have a head, then you have a right shoulder, maybe two right shoulders before we see a move to the downside. So that's the reason why I took this a trade, and maybe I can just show you. So yeah, so we are actually waiting to see maybe how this is gonna play out, but definitely our first target was this. We're talking about 9%. Our stop loss was 32. Of course, we've already closed some of the positions, all right, and then we're looking for another entry, and then maybe we will go down with this because you can see here, even though it has come all the way to this level over there, and see it has come over maybe to give us 1 and 2, some sort of like a double top over here, and then definitely we look if it's going to play out to the downside. Then of course our overall move that you're also looking at, you're looking at also maybe this thing playing all the way. Let's assume that that's the same. So we're looking at this market playing all the way to here. That's a possible 18% on this particular trade. So let's see how that is gonna play out. All right, let me show you another trade. Then I want to show you how how we normally take these trades and what's actually going on at the back of my mind. So let's say, for example, NSDJPY. I think this is also another trade that I gave out, if I'm not wrong. You can see that. So maybe I start from the daily time frame. You can see that from the daily time frame, we had this move over here. So of course the market came all the way to this level. Let's go to the weekly. Yeah, okay, look, the market has been quite corrective. All right, look at that, very corrective. We had an impulse move, correction, impulse move. Then look here, it has given us a sort of like a double top. So I'm actually looking for long-term sales all the way to this level over here to complete our 90% true. And then already we have this one here and a touch over here, and then we have another touch over here. So when you go to the daily time frame, you see here, you see that this market approached this level like this, and you see these are the things that we are always looking out for. We are looking for these patterns. The moment you see this kind of a pattern, then you know that this thing is going to reverse. And then look at that, started being corrective to this level over here. All right, and then when it got there, look, it just went down. Then it came all the way halfway, now I reached the trend line. Then it started being being corrective, even though it was giving us an expanding channel over here. All right, so when I go to the 4 hour time frame, then you can see that we had an expansion. We had an expanding channel. So then look how the market came. It came very corrective, impulse move, correction, passive correction, then all the way to this level over here. Then boom, just came all the way down. Wow. But I was interested in this level, because when it got here, it came up here. I was looking for it to reach this target, never reached, just came down then I caught it on this particular move over here. So let me go to the 1 hour time frame. So on the 1 hour time frame, you can see that I was actually I saw this move, had an impulse move correction, when it got here the market came back. So the moment it gave me these touches over here, that's the reason why I drew my trend line like here, and then I'm definitely targeting. I was the moment I saw this. Let me show you something here. So this market was like that. Good. Yes, so definitely I was looking. This was another this was a touch and a touch here. I was looking for this market to come all the way to this level, either pass a little bit the trend line before it start tripping to the downside. Let's see, you can see it's a possible 4.53%. So what happened, you can see that it actually came all the way and just triggers us in. Our stop loss was 25 pips just above the level over there, and of course we're targeting this level over here, and then you can see just actually just played out like that. Even though it's still trending or still moving, you can see that already we are in profit. Okay, so of course we're in profits, adjusted our stop loss to break even, so we not close our position. Of course, remember to pay yourself, and you can see that we already moved 87 pips, even though our target was around maybe 114, maybe before we see it reaching all the way to the trend, which is 100 per trade. And remember to pay yourself. All right, remember to always close up position, withdraw, hold on break even. Look, pay yourself. The market does not owe you anything. Whatever you get, please withdraw and pay yourself. Teach your mind how to do that. Okay, beautiful. Let's look at another one. So these are just live trades that we've taken. We've been taking since I did episode 1. Of course, these are trades that I've been taking. You can see, okay, this one I was waiting for it to come all the way to this level. It never came out, so it just went, which is fine, no problem. Yeah, no problem. If it plays out, well and good. If it doesn't play out, I still fine. But there are many opportunities on this market, so you don't need to chase things. Okay, just need to hold on, all right, and see how this is gonna play out. So let me look for another trade that we took that actually played out. Okay, yeah, beautiful. This man, I love this trade. This trade was actually one of my best trades, I can say, I've taken in the past 2 weeks, right? And I'm going to show you the mindset behind this trade and the reason why I took this trade. So for example, you can see that from the weekly time frame, definitely had an impulse move correction, you had an impulse move, then you had a breakout to this level over here, and the market, look at this is amazing. When I see this thing, I just smile. Look, these are my go-to set. The moment I see the market is approaching a high, and then you can see that this was a previous high, right? The moment I see the market approaching this high like this, look, just past it a bit, I know these are sniper entries. You put yourselves limit over here, just trigger, and the market just goes down. And look at that, how many clue you have gotten. We're talking about a possible 1,000 pips, and it just plays out like magic. All right, it's not magic. All right, so you can see that. Let me just take this out so that at least my chart are clean. So you see that here. Let me take this out. This market, you can see that the market has been trending on the downside. So of course, the overall move for me I'm looking is what I'm looking for buys in the coming weeks and months. I'm looking for buys, but before those buys, there's so many opportunities, because you can see that this market is forming a descending structure. Of course, after descending structure is a sign of reversal. Then you can see that here, the moment it comes all over here and give us this double bottom over here, then we are looking to ride. Then you can see, of course, it's actually formed a what, a big W on the weekly time frame. But you can't trade on the weekly time frame. You have to look for opportunities on lower time frame. Okay, So what happened? Let me take out this arrow. So let's go to the daily time frame. So the daily time frame, when we came down here, of course, you see that this was what was happening. Let me show you. This was what was happening. This market had given me that. Yes, that was what was going on. So definitely we had this there was this descending structure and the market just moved out. All right, so I was actually anticipating that it's actually going to come all the way to this level over here, then before I'm interested in sales, but actually it never. Well, the moment it got to this level over here, it gave me a what? It gave me a sell structure, and that's the reason why I knew that it was time for me to do what? It was time for me to enter. So now let me go to the 4-hour time frame. Was it 4-hour time frame, or maybe straight to the 1-hour time frame? And I'll show you what I saw. So the moment you can see, it was quite impulsive to the upside. Impulsively, it moved impulsively to the upside. Okay, so you see that there was this high over here. So when the market got to look at this, very strong momentum, and then what happened? And then it just gave me this, and then look at that structure. It was a beautiful, amazing structure. Look at that. It was a beautiful, amazing scoop structure. You know, this is an arc, and maybe in the coming episode we are going to talk about this arcs. The moment you see that, boom, I'm expecting this market to move to the downside. Then you can see also this is what this is. We're looking at this and that and that and that. That's still an M formation or a double top, which looks invalidated, and I'm going to talk about double top also. Some of the double top you might think is invalidated, but meanwhile the market want to catch you on the wrong side before it can go to a direction. So what was I doing? The moment I saw this, I still did not enter, because this market could have easily gone, maybe give us another touch, maybe before, you know, you see that structure over here will have gone, given us another touch over there before it moved down. So I was patient enough, and you require a lot of patience in this game. I wanted to see a breakout and maybe a flag, then I'll be interested in sell. And what happened? Actually played out, broke out. Then look at that. Now we talk about something here. You have to understand that these flags, maybe I should just do an episode on flags. You have to know the position of where the flag formed. All right, because if, for example, this is the market and the market is moving this way, all right, normally you'll expect after the break to see this type of flag before you can enter and right to the downside. But sometimes the flag can be, the market can do this, move the same way, then it will break out, but now the flag will be facing down. But this is still, this flag will play out to the 90%, 90% low. But you know, because most people, this flag, if this flag could have happened here, that is when now it will be a confirmation for them that they're going to do what? They're going to buy. So sometimes when people see this thing, they think that this is a sign of reversal, that the market is going to go up, then the market goes down. Because remember, whether the flag is facing up or down, this days after the breakout, we are looking for whatever kind of flag, facing up or facing down. Then this flag is going to play 90% before anything else. All right, and that's why you are seeing that. For example, in this trade that I'm showing you over here, immediately after the breakout, it was quite confused. It could have confused you if you don't understand this, because maybe you'll be saying that no, this thing is going to reverse. Look at the flag. Look at the flag. The flag is facing to the downside. It's actually a 1-hour flag, and we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 14. And remember, at least 6 or 8 candlesticks is enough. But so what did I do? I actually put my sell stop over here. Then I was targeting, my first target was where the move started from, which was a what? Which was a 4%. And what happened? You can see it just tagged me in and moved. Look, 37 pip stop loss. Then it just tagged me in. Of course, I was in profits like that, and then Definitely these moves, when they move 2 times, you can close some position, especially maybe if you're holding like 2 positions, you can close one and hold the other one and see how it's going to play out. All right, then look, then after there it gave us what, another flag, which was quite confusing because this was impulse move correction, continuation, right? You can just continue the upside. So I was keenly watching it, and what happened after it moved out, of course after this, well, this is a bullish flag. I was expecting a move to the upside, but now immediately after the move to the upside, look, it started being corrected again. To the upside, and that was also another beautiful and amazing setup. You can see 1, 2, like 3 touches over here. So I knew that here, look, I'm gonna sell this thing, maybe even target here as my first target, and of course overall I want to overall I want to I want to hold it to this level over here. So you can see this was a 7%. All right. So remember, this one is still, even though it just come all the way to our entry, our stop loss has not yet been triggered. All right. So let's see how it played out. So you see that my entry was triggered over there. Then I was actually in the trade. Look at that. Came all the way. That's why you see when you move to break even so quickly, you'll be taken out, and then the market will move to your direction, because once it moves, there was one spike to take people who had moved into break even quickly. Then look, it just continued laying down. Of course, it gave us a what after the breakout. I was expecting to see a flag, sort of like an expanding channel of which people have entered here at the breakout. Okay, I wanted to hold it and then see at how it just went and went and went and went and hit our what, and hit our target. So look, and that's definitely all our targets have been hit. Now you're looking at this, you're looking at 4% was completed. All right, then you're also looking at a what, at a 7.97. So talking about almost a 12% on just these two trades over here. So this is very, very important, and this is very, very crucial where the flag happens. See, this flag can easily confuse you. You might think that, oh, this one is facing down, so therefore the market is going to reverse. But definitely after the breakout, whether it is facing down or facing up, I'm looking forward for a continuation, even though you can still call this a bigger flag. All right, so you can see impulse move correction, impulse move, and this consolidation, of course, breakout. Look, another entry was here immediately after the breakout. Look at the flag. People have actually entered and maximized on that move over there. So that is what I was actually looking at. That is what I was trading. Maybe let me look at if I can see 1 or 2 more setups. Let me delete this quickly. I like to make sure that my charts are clean. All right, yes, okay. So let's remove that, and then maybe let's remove this one over here. And last but not least, let's take out that one. Okay, beautiful. So this one is, it's good for future reference, and also when you're doing back testing and you're looking at this trade, how they played out, and to see the psychology behind it, it's good to just have this. And you can see I'd actually predicted that this market is going to behave this way, then go down. Then you can see it actually played out like that. All right, let's look at maybe 1 more or 2 more. Let's see what other trade. I don't know if I took this USDCHF or it was just a prediction. Yeah, so let's look at maybe, for example, look at this USD JPY, okay, USDN. So you can see that we had this structure over here, beautifully and amazing. And then I was actually anticipating for this. Let me show you. Let me just take this out. So initially, after we came from this move over here, all right, when I saw this flag over here, I was actually interested in sales. Okay, definitely I would want to catch my sales over here, all right, or maybe you can catch them up over there. But I don't like these risk entries. I like more confirmation, so I'll enter the breakout and maybe my stop loss also be reduced. So what happened after this flag? I was actually looking for for this thing to play out, because you see we are coming from this 1, 2, 3, 4 touches, impulse move, correction, then continuation. But it never played out that way, because as you can see, if for example you just play this thing out, you can see that it just went, and currently that's where we are. So the moment this market just broke out and now it's approaching this level over here, now I'm actually looking for what? I'm actually looking if this market is going to give me a double top over here, then I can be able now to ride this move all the way to the down here. And look, we're looking at a possible what? We're looking at a possible 13%. So that's what I'm saying, that don't chase these things, okay? Let the market come to you. Let the market just come to you. Don't chase the market. There's so many opportunities, all right? There's so many opportunities that will form. So what I'm looking for here, as this USJPY is approaching this level, definitely I am looking for this, and then I'm going to ride this one. The moment I see this, I'll be so happy. I'll enter maybe at the breakout or the top here, put my stop loss somewhere around here, enter, then I'm riding this move to the downside. So that is basically what I am normally looking at. All right, I'm normally looking at, and let's find maybe one more. So finally, we are looking at this card CHF, and you can see here we actually managed to bag a 5%. But look at this opportunity, and I want to show you the mindset behind this trade, the reason why we took it, and actually how it played out. Even though you can see split continue to play, but at least our target was reached. So when you go to the 4-hour time frame, you can see that this trade. Okay, so initially there was this setup over here. Of course, which is the setup you could have maximized on, because you can see that this market approached this level very correctively. The moment after here, see there was a correction over here. So I'm sure if you go to the 15 minutes time frame, maybe let me just take this out. So if you go to the 15 minutes time frame, let's go to the 15 minutes time frame. Yeah, you can see that this market actually gave us this. Yeah, so look at this. It was quite corrective. Let's look at what was there on the 1-hour time frame. Yeah, this is amazingly beautiful. So this is a very good structure that I like trading. I like trading this. The moment I see the market approaching these levels, and giving me corrective structures, then I'm actually very quite much interested. All right, so definitely you could have put your sell stop over there, maybe put your 23 pip stop loss. Of course, you can target here 1.6, or maybe you can just target the overall 5.7. You can see that it will have actually just tagged you in, and definitely to come all the way there. And then look at that. See, so immediately after the breakout, look, it came all the way to this level over here. Then look what happened. Gave you another beautiful structure. Of course, anytime if you miss this first move over here, after the breakout, there will always be a correction. Then you can enter this correction over here. All right, so even if you could have entered this one here, stop loss maybe being somewhere around 32 pips, you could have still been able to manage to make around 2%, or if there was the same target to this one, 2.57%. Now something happened after here, and that's what I want to show you, because this is actually a trade that we took. Okay, let me go back to the 4-hour time frame. Yeah, because I didn't want to delete that. So what happened is, look at this, quite corrective. Of course, we're looking for sells. It came broke out, yeah, came all the way. Never did it reach here. Look at that, look at that. Even if people have held this because of the 90% rule, remember we normally target the 90% rule. Powerful. You could have actually been able to make a 14.85, and you can see it actually played out. Even if the second entry, still it played out all the way to the end. Okay, but we were not able to get that opportunity. We actually got the second opportunity. So from here, after the 90%, the market now started going back, correctively, and look, it went all the way. Okay, so definitely I was anticipating for this. Let me show you. I was looking for this market to come all the way to this level over here, to come and give me a clean double top, then before I can be able to ride on the downside. So definitely I never reached, which is fine. So after it moved down, I was actually looking for a flag, and what happened? Look at that, gave me a flag after that. And then look, if we go to the 1 hour time frame, I told you this this candlestick, they should not be less than what? They should not be less than 6 or 8. And you can see this is very many candlesticks on the 1 hour time frame. See, so we had an impulse, and then we had this thing that I said I'm going to talk about in one of the episode. This moved to that. This, so of course I was looking for a move to the downside. So this is a clean 43 pip. Then I wanted to enter at the breakout. Then of course my target was at this level over here. That was 5.71%, and you can see just tagged me in and just moved into profit, came close, consolidated. It really actually came almost hitting our stop loss, but we managed. We were calmly waiting to see how it's gonna play out. That was like 12 pip, consolidated I think at the entry. Then what happened after consolidation to the entry over here? Look, and I know many people here, I'm sure they were so much worried, and they came out. There are some people, I'm sure, once it came back again, they say, look, I can't hold this thing. I came out. And then immediately after this consolidation, look, our stop loss was still safe. Boom, just moved straight into our target, and 5.71% hit. Even though this market is still continuing to play out, you can see that our target was reached, and we don't want to be greedy. Okay, you don't want to be greedy. What you can do is that if you have maybe you had open like 2 or 3 positions, you can close maybe 2 here and just keep on trailing your stop loss, because you can see that it's consolidating, bigger consolidation before maybe it moves to the downside. So guys, this is what we are looking at. This is how I normally approach the markets. Let me know in the comment section below if you understand. Let me know how you'd like me to to cover, or what you'd like, actually what you would like me to cover in the next episode. All right, definitely I want to cover on flags. All right, because it's a lot of question I get, and I also see people who wrongly trade flags in the wrong places. We have to know where to take these flags on, because you can take a bearish flag in the wrong place, and then you just tag out, and then to keep on hitting your stop loss. So the next topic in the next episode, I want to talk about flags, and so that at least you can be able to understand it better, guys. But I hope you get a lot of value from this. I hope you be able to learn something from this. I hope that this is going to help you to be able to trade better. It's going to help you to advance your game in the trading markets and everything. I hope that you'll be able to make money at the end of the day through this, guys. So thank you so much for watching. We are so happy that episode 1 hit 1,000 views, guys. Give us 1,500 views on this episode 2. Then we are going to release episode 3 on flags. Episode 3, I'm just going to talk about flags and various types of flags. Various types of flag. We have the steep flags, we have the flat flags, we have the what? So many flags. So watch out, watch this, subscribe, like, turn on the notification bell. You don't miss on the next episode. Leave us a comment on the comment section below. I'll be so happy to reach out, guys. Let's make this video trend. Let it reach 1,500 views, and then we're going to release another bigger and banger video. Thank you so much, guys, for watching. This is Eagle Eye FX signing out.